Those of you who don't have the Atlas line, all the orders are the same regardless if we're using TradeStation, NinjaTrader, or eSignal. So those of you who have the Atlas line, hopefully you guys took advantage of this short here at 1263.50. Why is it 1263.50, right? And I explained this in the webinars that I give. I want you to understand why these orders exist. Why is it? It's because we have one, just write this down here, 1 and 2, 1 second here, consecutive candles that are closing below the Atlas line. And so as soon as the Atlas line starts plotting, 2 consecutive closings gives me an order, all right? And therefore, as soon as I have an order to go long or short, not only is it displayed on the chart, you can also have a WAV file for an audible alert, but it also, I want you to understand how these trades are configured, and therefore going short at 1263.50 right here, actually it's like this here, right there, is the candle to go short on. Alright? Testing 1, 2, 3. Elise, everybody, just do a quick sound check, making sure you guys can hear me loud and clear. Javier, Brian, Elise, Dennis, Lee, Kishmore. Good morning, Kishmore. Kishore, I'm sorry, Kishore. Kishore. Alright, guys. Those of you who have the Atlas line already, we all have the same orders, right? And really I make this so there's no interpretation. Was that everyone has the Atlas line, gets the same order, all right? Everybody gets the same order, and I want to make this as clear and as objective as I can. And so 1263.50, if you go in at a market order, you're going to lose a tick, obviously, but there's a reason why we're going short here, and I do a webinar with everyone who purchases the Atlas line. It's recorded. You get a login, a private login to view the webinar. I want to make sure that you, as a trader using the Atlas line, understand how it works. So, as an example, why is this 1263.50? What's the reason for this order short? And the reason for this order short is because 2 consecutive candles posted a close below the Atlas line. And so you don't necessarily have to have this up. I can turn them on, I can turn them off, I can have a sound alert as well added to an order. But more importantly, I want to make sure that you understand why we're using the order short. And since I am against indicators, right? Everything that I show and I teach and all my courses are all about losing your indicators. I want you to think about the Atlas line not as an indicator but a software tool, because I'm not using the Atlas line to tell me to go long or short. It's actually the opposite. I'm looking at price as it revolves around the Atlas line to tell me whether or not I should go long or short, or if it bounces off the Atlas line, it's called a bounce trade. And so really I'm concentrating on what price is doing as it crosses the Atlas line, and therefore it gives me a trade. Now I like to keep these webinars as impersonal as possible, so please, if you have questions, don't hesitate to ask me as we go along. I'm going to show you currencies. If you want to see crude oil, if you want to see any market, please let me know. I'll bring it up as well. Bob, good morning, Bob. Richard, I did get your email or your Skype. I will respond later today. Alright, very good. And so there's a lot we can do here with the Atlas line. It just doesn't give you an initial order. What it does, it provides a roadmap in a sense to tell you whether or not we should be long or short the market. So an order short here at 1263.50, I look at taking profit. You know, a lot of traders ask me, you know, how do you do that? How do you manage the trade? How do you take profit? How do you work your stops? Morning, Bob. And so the way that I like to look at the market is always looking at and reflecting on the current market conditions. And so I have to know whether the market's fast, if the market's slow, if it's volatile. I gotta have to concentrate on really what the market is showing me. So right now, you can see I have in the lower section here of the chart, lower window, lower pane, 3.21 right here. And then what this number is telling me is that about a 3-point range average is occurring on the current market conditions. And so any trade that I take, I have to take that into consideration. I have to look at this and I say, well, the market's moving about 3 points. Any profit or any stop, I have to take that and say, well, I can't have a 1-point stop. The market will run right over me. I can't think that I can use the current order as a 5-point profit target. I'm going to use the exact market conditions to lead me into taking profit and exiting the trade. So I teach this in pretty much great length in detail during the one-on-one webinar with Atlas Line, with anyone who gets the Atlas Line, purchases the Atlas Line. And because I want you to understand first how to use the Atlas Line with the market you're trading, whether it be overnight, whether it be currencies, whether it be E-mini, as well as how to manage the trade once you enter. Alright, now taking a look at this, we can see that 2 consecutive candles posted a close as soon as the Atlas Line began plotting, and therefore I'm short. I look down and I can see that it's about the ATR, average true range, is roughly 2 points. So at the time of this, or actually go back a little bit further, at 2.25 points, current market conditions, that is my exact profit target. Nothing more, really nothing less. Between 2 and 2.25 points is what I can achieve from this trade. And so moving forward, you can see that 1263.50, 1261.50, 1261, 1261.25. That's my profit target right there. Now, after this trade is taken, now what? Okay, we took the first trade of the day. Now I'm looking for some additional trades on the Atlas Line. First, let's look at what an Atlas Line pullback is. We could have it right now. An Atlas Line pullback is when we have a pullback occurring, and I explain this a little bit more in detail, but I'm going to say it's as simple as looking at 2 consecutive candles pulling back. All I'm using is price action. 2 consecutive candles pulling back, which are green. I just want to make it simple as green, 2 green candles showing me a pullback. The first red candle that posts after these 2 green candles are finished, I'm short. It's my definition of an Atlas Line pullback, and you enter the trade short. I just want to make sure that the trend short is still in effect. We're below the Atlas Line, and my entry is lower than my previous entry. And so again, I'm utilizing price action in telling me where I should go short, if in fact the trade is still good, if the trend is still to the downside. All these things come into play. But they are objective rules, and it's either a go or a no-go. Alright, let's take a look at a few other markets. I like to show you currencies. I like to show you markets that people trade. So if you take a look here at the euro this morning, here's the euro this morning, and we have a very similar euro short right here at 1.4413. How does this work? I look directly down. Let me just get this out of the way here. 1.4413. How does this work? 1, 2 consecutive candles plotting below the Atlas Line. I have a short signal. I look down. My ATR tells me about 17 ticks. So 17 ticks is what I can expect on this trade. What happened? It went down, looks like it went down about 23 ticks. So using the ATR to tell you how much precise profit target you should be taking is invaluable. And those of you who aren't using this as an ideal excuse me, to exit the trade and to also use this as a stop method, then you absolutely should be concentrating on it. All right, you see price coming back up. So if we have a short trade, let me just close this down here a little bit. If we happen to have a short trade that or short candle that closes back down after this green candle, I'm going to look to go short based on an Atlas line pullback. Those are the rules. If we have instead two consecutive candles now closing above the Atlas line, that order is going to be plotted on your chart, and it's going to be telling you to go long as soon as the second candle posts. So we have a potential long here on the E-mini if two consecutive candles post. Now, an additional order that it also provides is called a bounce trade, and you can turn all of these on or off. It's very customizable as far as how the trader wants to see the text on your chart. There's no parameters that have to be optimized for any market, so you don't have to do any of that. When you take a look at a bounce trade works where price bounces off the Atlas line. Very simply, it takes a look at price hitting the Atlas line and bouncing back. So if this becomes and turns to be a bounce trade, we'll get an order as well. Jim has a question here. What types of time frames? It does work on range bars. It does work on tick charts. It does work on 1 minute, 3 minute, 5 minute. I would not go very low or very small time frame. It is going to get you in very early. So if I take this E-mini 5 minute and I make that, let's say, a 3 minute, it still gave you the same order, 1262.50 here, but you're using it on a 3 minute chart. The rules are exactly the same, Jim. 1, 2 consecutive candles that close below the Atlas line, that's my order. So now on the E-mini, if I leave this 3 minute chart, if it happens to close above, as it looks like it may, right, and we have to wait until it posts, an order will be provided to you. If it shoots right back down, no order is given. So I'm still looking for that same 2 consecutive closings above or below the Atlas line, whether it be on the 5 minute, 3 minute, 1 minute, to go long or short. Your range bar is the same thing, Jim. Alright. So this is a 5 minute on the Euro. This is a 3 minute on the E-mini. The rules do not change. Tayer says here, how do you reset the Atlas line to trade European session? If I started trading at night, should I reset the Atlas line for New York session? It's a great question. You can actually add Tayer more than one Atlas line to your chart. So that means that if you wanted to trade the overnight when the Life Exchange opens in London, typically here Eastern Standard, it's 3:30 in the morning that the Life Exchange opens and we get a move. And so we can add a secondary Atlas line to the chart. And so you do that here by adding a secondary Atlas line like this, setting it to either 1 o'clock Eastern Standard, which will be the equivalent of your time zone, or I like also 3 o'clock in the morning Eastern Standard. So when that occurs, you can see that I have a secondary Atlas line giving me orders to go long and short, and this happens to be what you're looking at here is the Euro on the 5 minute time frame. So this is a overnight. What you can see here are these orders here, bounce trade, double bar, all overnight. Okay, so you can turn these off, you can turn these on, and on the E-mini on a 3 minute, you can see here that an order was given to go long here on a 3-minute chart. Just expand that here, right there. Again, the rules don't change. 2 consecutive candles above is now telling me that the market's bias is now to the long side. No, Sanjay says here, we have a lot of long signals. Do we have to take them all? No. My preference is a double bar long or double bar short. And then I like the bounce trades. All right, Sanjay, in the euro currency. Let's take a look at the euro here. Put this on a 5-minute. Now, we have here 2 consecutive candles closing above. That's our long. This candle is also a bounce trade, so that's why I see that a bounce. So it's a bounce and a long trade as well on the euro overnight. Same thing with here, Sanjay. We have here 1, 2 to go long, and so you're long. Your profit target is your 11 ticks, ATR. 4104 plus 11 is 4106. Went up to 4127, and so definitely 11 ticks was made there. Okay. When it comes to bounce trades, I want you to pick and choose, Sanjay, the best trade for the job, or the best bounce trade for the job. So what that means is, as an example, you see these bounce trades that occur. Let me get this out of the way here. These bounce trades here, if you remember from the videos, this is a red candle. So if it's a red candle, the bounce trade should not be taken. We only want to take a bounce long if it's green, a bounce short if it's red. And so if you look at, let's just expand here, the euro, you see this candle here, if it happened to touch the Atlas line, that's a bounce short. It's a red candle. It's also a double bar short. This number coincides with this, 4066, 4066. All right. Okay. You got it, Dennis. Let's take a look at the DAX. Somebody had a question on the DAX. The DAX is going to be FDAX. Let's take a look at what the DAX looks like today on the Atlas line. Alright, so here we have the DAX. This is for Vince. Vince, the DAX, if you see this double bar order short right here, it was provided to you because, as you can see, we have 1 and we have 2 consecutive candles closing below the Atlas line. This is really, really tight here. But as it stands, I have to be objective. The rules are 2 consecutive closings. That's a closing. Price below the Atlas line. That's a trade. Now, the stop, Vince, would be if price comes and closes above the Atlas line in the opposite direction. That means that price is now proving to me that it should not go to the short side. It's now closed on the opposite side, and I have to be out. That's one stop. The second stop is when we have a catastrophic stop where you only want to risk, let's say, 3 or 4 points, and you're out of the trade. I like to look at the ATR down here, Vince, and I like to see this and have a measure of what the market's doing, and then take a stop based on that ATR. And so if the ATR, as you can see, is either 14 or 12, I use that as a measure of what my stop should be. Right, Vince? So there's a stop based on the current market conditions, which I use the ATR. There's a stop based on closing on the opposite side of the Atlas line, which has just proved to me that it's not going in that direction. There's also a stop as far as a reversal order as well. But remember, concentrate on following what price is showing you and doing instead of following an indicator. You know, I really try to educate as many traders as possible to really get away from indicators as far as leading you as a leading indicator. Price will always show you where it wants to go. All right, let's take a look at the euro. So the euro, as an example here, just show you here, has a long right there. If this candle right here maintains itself below the Atlas line, I'm out of the trade. It's enough for me to say it's proving that it doesn't want to go to the short side or to the long side. Now it proves that it wants to go short. Let's take a look at the E-mini again and see what it's doing. Okay, still above the Atlas line. I want to have a reason to go long, a reason to go short. And the latest testimonial with Alan that's been using the Atlas line, he uses it to tell him whether he should stay long, scalp long, go short, scalp short. Remember, many traders use the Atlas line not just for these orders. They have their own methods of trading. And so whether you want to scalp, whether you want to go you know, in conjunction with something else, think of it as almost a filter to keep you on the right side of the market. All right. Any other markets you guys want me to take a look at? I'll be happy to bring up really whatever you guys trade, whether it be the crude, the gold, other currencies. My goal here is to show you that this is a unoptimized, and I'll show you again here the back end. If you take a look at the Atlas line here, this is the parameter to place a wave file for an audible alert. This is a text, how many bars back you want the text to display on your chart. Font size, how large or small. For example, if I want it larger, do that. Market open, really, because there are traders all over the world that use the software, I have to incorporate a parameter that says, well, the E-mini opens for me in New York at 9:30, it opens for you in Australia at 23:30, and therefore this has to be adjusted based on your time frame. Turn on or off the orders, trade crosses, trade double closes, trade bounces, on or off. That's it. There's nothing else to optimize or to calculate or to play around with. That's all the Atlas line has. And you can also make the line blue, red, green, purple, whatever you want. All right. Russell. Sure. Let's take a look at the Russell here. The Russell is TF. Is it the E-mini Russell you trade, Phil, or just the TF? Here's the Russell. All right, couple of questions here. First, here's the Russell here. I think it was, let me see who asked the question. Phil. Yes. I'll show you the crude in just a second. British pound, just a second. Russell, Phil. Here's the Russell. 2 consecutive candles closing below. There's your profit. 2 consecutive candles closing above. We're long. The orders are displayed in your chart, but I want you to also see it as it's occurring, understand why we're taking a trade, and let the price prove where it wants to go. I mean, that's really, I can't say it more. And when we do we have a webinar which is included with the Atlas line that I do privately. We discuss what currencies, if it's overnight that you want to trade, what markets, and so I guide you in that way. You're welcome, Phil. The question here from Richard. I know you don't use indicators and just use price action, but do the candles influence any of your decisions, please? Yes. The candles that are appearing, I don't look at shooting stars or dojis and refer to them in that manner. Okay. Although I have to say that candlestick interpretation is important. Instead, I look at whether the candle if I want to go long or I want to go short, if it shows me that. And by showing me that, as simple as it can be, I like to see a green candle when I want to go long and a red candle when I want to go short. Now for the double bar long and double bar short orders, I don't use that. I say as simple as it can be, 2 candles closing, I'm long, I'm short. But on the bounce trades, I do look at that. On the bounce trades, if a candle is going to bounce off the Atlas line and come back down, then I want to make sure that when it does bounce off the Atlas line, it's a red candle to the short side, or if it bounces from the long side, it's a green candle. Only because I want proof that it is in fact bouncing, getting slapped up or slapped down, strong enough to continue the move. Right, Richard? Crude oil, Kishore. Kishori wants to see the crude. Let's take a look at the crude here. Okay, here's the crude oil for today. We do have an Atlas line pullback. I can see it already. So here's the crude oil. 1, 2 consecutive candles on the crude. 95.1. It's that closing price, 95.10. I'm short. I look down. I think the question now is that who asked this question about the profit target? Let me see. It was Will Tan. Can you please explain how again do you know how many ticks your target you want to go? All right, Phil. I'm sorry, not Phil. Will Tan. Will, take a look at the chart. You see the ATR down here? It's telling me the current market conditions. Period. I look down as soon as I get an order. Let me just do this. As soon as I get an order to go short, I immediately look down, Will, and you see that number? 0.37. That is my profit target. 37 cents. That's my profit target. All right. And now, an Atlas line pullback. 1, 2, consecutive candles pulling up. The first red candle that goes down. We're below the Atlas line. I'm short again. And as long as the trend is in place, I'll go short again. We're below the Atlas line. I'll go short again. It doesn't have to. I have to say, trading is not something that we make it complicated. It doesn't have to be complicated. It should be clean and have clarity. You know, I was working with a trader the other day that he came to me. He just joined the mentorship program, and as a matter of fact, I have a special on the mentorship program. Huge discount for a nice class size. Anyone interested in the mentorship program, I have a great deal, probably almost 50% off the mentorship program. It's a class setting, 8 weeks, you and me. It includes the Atlas line. And so this trader, I'm not going to mention his name, he may be in the room here, he came to me and he said, hey, I've been using a stochastic, a moving average, and a momentum, and something else, I don't know, Bollinger Band or something. And he said to me, I put all this stuff on the chart, I can't make heads or tails of what to do. So I put up the Atlas line and I say, what do you do? Well, he said, 2 bars below I go long, 2 bars below I go short. And he asked me, is that it? I said, that's it. For the Atlas line, there's nothing more that needs to be understood. It's only where price is trading and how it's trading. All right? Now, the Atlas line is not any type of moving average. There's not any indicator attached to it. So you don't have to think about an optimization. And if you look at how moving averages or how any other indicator works, you have to input parameters into it. You have to input parameters into it. So there are no parameters to input. What it's doing, it's taking price, it looks at price, and what it did, let's say 14 days ago, what it did 5 days ago, what it did yesterday. It computes a calculation. It tells you this is how price this is where it should plot. This is what price is going to do. You got it, Kishmore. You're very welcome. Kishore. I'm sorry, I say Kishmore. Kishori. Kishori Madi. All right, so on the crude oil here, 2 consecutive candles. 1, 2, pulling back. My first candle, Richard, being red, confirming that the trade is still down. I'm short. I'm looking at 36 cents at the moment if I enter the trade. That's a profit target. Let's take a look at the E-mini. Let's look at what the E-mini is doing here. All right. Let's take a look at this overnight. And now, I guess to answer, Richard, your question is a little bit clearer. See this bounce long that occurred here overnight? Right there at about 5:40 in the morning. It bounced, it hit the Atlas line, it bounced off. What color is that candle? Candle's green. So it is telling me that it bounced off, closed higher than it opened. It's a higher probability that it's going to continue long. That's the reason why that trade is a good trade. On the flip side, if that candle was red, I would not take that. I would skip it, because that does not give me any faith that the market is in fact going to bounce off the Atlas line. Okay? The double bar signals, Sanjay, I like them, though it's my preference to trade. If a bounce trade comes along, it has to fit this criteria. It has to close in the same direction as I want it to go, Sanjay. It's a great filtering method. Choppy markets, Jim? Great question. What happens when the market's choppy, back and forth? There is a video that I did. It's a video how-to manual. And, you know, I now have, I don't know, maybe 300 trading videos out there on the internet, YouTube and everywhere, of all different price action trading methods that I do. One of the things that I find is that during choppy markets, what the mistake that most traders make is after we realize it's choppy, we keep on trading. And so first we have to realize, is it choppy or is it not choppy, or what has happened to tell us that it's choppy? And so the first thing you have to do is realize, are we in a choppy market or not? And so if you haven't watched that video how-to manual on the Atlas line, it gives you a reason. If price is bouncing back and forth on the Atlas line as it's chopping, I only allow that to happen twice. After which I say I'm not going to trade until it gets out of this chop. And so you have to see, has it not conformed twice, moving above or below the Atlas line with profit? And if it doesn't do that twice in a row, then you stop. You have to wait until the chop is out of play, and when it moves away from the chop, then you can now think about going long or short. It's got to be 4, Bob. 14 on the ATR is a default, right? So if you go here, the ATR here, it's defaulted to 14, Bob. Change that to 4 or even 5. Save it as a template, right? 14 is too long. I want to receive, or I want to know what the current market conditions, and 14 is not current. 14 is, what is that, like 4 hours maybe? 3 hours? It's too long of a time span. I want to look at currently the last half hour, 25 minutes, what that range is. Okay, Bob? Bob Cunha from Jersey. Now in Florida visiting, right? All right, very good. All right, so now if we happen to have this candle close above, which looks like it will, and let me just add here my bar timer, which is important. There we go, a minute left. It's a long trade. Okay. All right, we have here the E-mini. Let's see if we get that long. We have the crude oil, possible another Atlas line pullback right here. Remember, wait for this to close, wait for confirmation of price, follow the price. It's your best friend. It's a leading indicator. Here's the E-mini, here's the crude. Let's bring up another market. Let's bring up, let's take a look here. Australian dollar, anyone? All right, here's Australian dollar again, a short trade, 1-2, short, right there. Now, take a look at this just a little bit clearer here. Did we have 2 consecutive candles to go long here, closing above the Atlas line? Anyone? Did we have 2 closings here? No. So if we didn't have 2 closings, that means price did not confirm to go long, and therefore there's no long signal. There's no long trade. On the other hand, 1, 2 consecutive candles closing below. I'm short. I look down. The profit target is about 15 ticks. That's what I want. Okay. Now, if we have 2 consecutive candles closing above, I'm long. And that's how we maintain clarity when looking at trading the markets. All right. That's Australian dollar. Let's go back to the euro. Let's see what the 6E is doing. Okay. When this candle closes, maybe a long. Crude oil, I'm looking at it to go short if in fact this candle closes red. If not, I'll wait for the next candle to close red. All right. That's the crude. That's the 6E. I have a long way to go here. This is 4 minutes.